Bitcoin pulls back after new highs. Miners are moving machines ahead of the halving event, and the European Parliament is paving the way to banning crypto payments. These stories and more on this week's Bitcoin News Update. Hi, I'm Nate Martin with this week's Bitcoin News Update. After Bitcoin bolted to new highs, breaking the $73,000 mark last week, the tone entering this week was with expectations that profit taking in the ETF markets and continued outflows from Grayscale's Bitcoin Trust would reverse some of Bitcoin's momentum. And that seemed to play out as by Wednesday, Bitcoin was trading more than 15% lower than the all-time high, reaching below $61,000 for the first time in 3 weeks. JP Morgan strategists warned that Bitcoin still looks overbought. By week's end, Bitcoin had recovered some of its footing, trading near $65,000. In the face of the drawdown, CryptoQuant research says that, quote, the Bitcoin bull cycle is still far from over, as shown by the relatively low level of new investment flows. And while the recent correction was caused by overheated market conditions, their assertion stems from the success of spot Bitcoin ETFs paired with the anticipated supply strain from the upcoming halving event, which is now less than a month away. CryptoQuant CEO Ki-Young Ju posted on X on Thursday that ETF demand might heat up if Bitcoin's price retreats to critical support levels. He highlighted in his post that, quote, new whales, mainly ETF buyers, have a $56,000 on-chain cost basis, and he expects significant inflow should BTC's price dip to that level. ARK Invest CEO Cathie Wood is holding fast to her Bitcoin price target. Speaking at the Friday Bitcoin Investor Day conference in New York, Wood called Bitcoin, quote, a financial superhighway, and that with more institutions entering the space, its price could easily rise to more than $3.5 million, saying, quote, Bitcoin has miles to go. But rather than give a specific price target, she pointed back to her previous target of $1.5 million. Bitcoin mining company Riot Platforms has run into a wall as it pursues approval to build what would be the largest Bitcoin mining facility in Texas. The Navarro County Commissioners declined to approve the zoning change necessary for the mining facility to move forward, citing numerous emails, texts, and personal visits from residents opposing the project. While Texas in recent years has offered a warm welcome to mining facilities, renewed concerns about the amount of electricity and water necessary to operate such a large mining farm, as well as the relatively few permanent jobs created by the mining industry statewide, prompted the Commission to put a halt to the process. The European Union is poised to enact changes to its anti-money laundering and counter-terrorist finance laws to include a ban on all cryptocurrency transactions made through hosted crypto wallets. The new law is expected to be fully implemented within 3 years from its full adoption, but Daniel Lottie Troster, who hosts the Sound Money Bitcoin podcast, lamented in a post on X that under the new rules you wouldn't be allowed to send non-KYC Bitcoin to your own account on an exchange in order to sell it. He also pointed to the difficulties in enforcing such rules for hosted wallets which are operated outside the EU's jurisdiction. Around 600,000 S19 mining computers will make their way out of the U.S. to regions with cheaper electricity, according to Ethan Vera, COO of logistics firm Luxor Technology. U.S.-based mining firms like Riot Platforms and Marathon Digital have to upgrade to more efficient machines and move the older models in order to maintain their margins, which will become that much more difficult after the reward for mining a Bitcoin block will be cut in half in about 4 weeks. S19 and similar models might not be profitable in the US after the halving, but might still generate profits and see extended life if hosted in some parts of Africa, such as Ethiopia and Nigeria, where many of the specialized mining computers will make their new home. Microstrategy is at it again, scooping up another 9,245 Bitcoin for about $623 million, or an average price of $67,382 per Bitcoin. Co-founder Michael Saylor stated that Bitcoin competes as an asset class against gold, real estate, and the S&P index, and that because Bitcoin is a technically superior asset, capital will continue to flow away from those assets into Bitcoin because, quote, there's just no reason to sell the winner to buy the losers. That's it for this week's Bitcoin News Update. See you next week.